or so. We also had the merger of railway budget with the union budget, and this time there was no distinction between the planned expenditure and non-planned expenditure. So a couple of firsts in this budget, and it seems that over the years government has been trying that several of the other reforms can happen outside the budget and not necessarily that every single economic and political agenda has to be outlined within the budget speech only. Having said that, I think the government, the finance minister articulated very well the broader economic agenda, the reform agenda, which also includes their political and social agenda in this budget. Some of the heartening feature of this budget, given the global environment, given the backdrop of demonetization which has impacted the growth, given the backdrop of lower private capex, I think the government deserves applaud for remaining on the path of fiscal consolidation. Why so much of noise is made around the fiscal consolidation? Why 3.2% versus a 3.5 or 3.7% is so important? Overall, household financial savings are 7.9% of GDP. And if the central government borrows almost, let's say, 3.5%, the state governments borrow another 3% or so of the GDP, that means very limited resources are available for the private sector to borrow. So the government starts crowding out private investments. We also have to keep in mind that the overall debt to GDP ratio, the combined debt of the central government and the state government in India is over 68% of the GDP. And compared to several other emerging markets, it is substantially higher. So over a period of time, we have to bring down the overall debt to GDP ratio of India. Also, we have to keep in mind this year, the interest expenses alone of the central government is more than 5 lakh crores. In fact, the almost fiscal deficit and interest payments are almost same. And if we keep on borrowing more money by having higher fiscal deficit, the situation can only worsen going forward. And that's why remaining on the path of fiscal consolidation is very important. And I think this government in last 2 or 3 years has clearly shown that both on the fiscal side as well as on the monetary side, they believe in improving the overall macroeconomic stability by having very prudent fiscal and monetary policy. So we have a monetary policy committee and a proper a framework of inflation targeting on the monetary side, and we have a firm path of fiscal consolidation where the finance minister mentioned about a target of 3% fiscal deficit to GDP in the next 2 years. And I think these things will go a long way in ensuring that India has a very stable macroeconomic environment. On that foundation, structural growth story can be built. If you look at the overall budget arithmetic, the numbers are credible, both on the expenditure side and on the revenue side. So first talking about the expenditure side, first of all, the total expenditure of the government is 12.7% of the GDP. This is the lowest as a percentage of GDP, this is the lowest number ever. So the size of the government has actually shrunk, which is actually a good thing. And then as I mentioned earlier, the government did not succumb to the pressure of spending more money or expanding the government to counter the slowdown, but I think has remained on the path of fiscal consolidation. But overall, when you look at the increase in the expenses at around 6.6% or so compared to the last year, I think that they are quite praiseworthy. And within that, the capital expenditure is likely to grow in double digit, little more than 10%, while the revenue expenditure is likely to grow only 6%, which is quite good. The overall subsidies as a percentage of GDP is at a multi-year low. So the government has genuinely been trying to put more resources for the capital expenditure and keeping the overall revenue expenditure quite contained. On the revenue side, the overall tax revenue estimates are quite credible, whether you look at the expectations on the service tax or the excise duty, which is likely to grow at 4 or 5%, the custom duty, which is likely to grow at 13% or so. The only aggressive target is on personal income tax, which I believe the government is banking on a substantial increase in the tax net going forward, and huge amount of improvement in the tax compliance for the individuals. And I think that's why the aggressive targets on the personal income tax, but for most of the other direct and indirect taxes, the overall estimates are quite conservative according to us. The government has not tinkered at all or much with the indirect taxes, and rightly so, considering the fact that we'll have the GST coming in from July, and therefore the government has not changed whether the service tax or excise duties or the custom duties broadly, and I think we'll have to wait and watch for the GST implementation on that. There has been no increase in the long-term capital gain tax for the availing the long-term capital gain tax benefit in securities, which again I think there was some fear, some speculation before the budget about that move, but the government has refrained from that, and I think that has been a positive news for the capital markets in general. Now one can talk about the recapitalization of the banks, where a 10,000 crore amount looks smaller, but I assume that maybe over a period of time, if there is a greater need for capital requirement of the banking system, government will surely provide those resources. So purely from the overall budget arithmetic point of view, both on the revenue side and on the expenditure side, we believe the numbers are quite credible. In last three budgets that we have seen, the government has always stick to the numbers that have been provided in the budget in terms of meeting the deficit targets. Clearly, the thrust of the budget has been on rural area. The thrust of the budget has been in increasing the capital expenditure instead of the revenue expenditure. The thrust of the budget has been on increasing the tax net, widening the tax net, and some of these will have longer term implications for the growth, and I'll talk about it a little later. But two or three things which have not been discussed as much about the budget, while of course budget is such a widely discussed subject, and I'm sure so much of analysis you would have already heard or you would have read about it, or you would have listened from so many experts, so I won't go too much detail into it beyond the numbers that I have just indicated. I think two or three things are quite important to note. One is that we heard about dismantling of FIPB, Foreign Investment Promotion Board, and further relaxation of the FDI measures and ease of doing business. Now this is quite credible because we are in a world where right from Mr. Donald Trump in United States, or you hear about the Brexit, which way the world is moving. The world is becoming more protectionist, more anti-immigration, more anti-globalization, more anti-trade. And here is a country which is actually opening up more to the global competition, as inviting foreign investors and foreign companies and putting a red carpet for them. So government also continued with a lower withholding tax on foreign investors in the bond market and extended the benefit to those who invest in masala bonds and all. So overall the government has been trying hard to welcome the foreign investment across sectors, across instruments, which is quite different than what's happening in the world. The another thing, every year I mention this point, that over a period of time the government should focus a lot more on outcome based budget rather than the outlays. So what happens that if any sector or any particular place where the government wants to spend money, they just indicate the amount that they are spending rather than what will be the outcome, what will be the result of spending that money in a target based system. This year it was quite heartening to hear some of these things, like when he talked about the NREGA spending, which is higher than last year. He mentioned about having 5 lakh new ponds, or either expanding those ponds or having new ponds, which is quite interesting, that it's not about the more money in NREGA, but that will also result in a particular kind of asset which can generate more returns over a longer period. Similarly, I remember when he talked about the education spending, he talked about learning based outcome for the colleges. When he talked about the healthcare spending, he talked about the two, I think, diseases which can be removed in next couple of years, in 2020 and 25, I think tuberculosis and one more. I think this is just beginning. Over a period of time, I think all of us would expect that the government moves more and more towards an outcome based budget rather than an outlays based budget. Another interesting thing that's happening in India is the way the government is using data analytics, the way government is using different kinds of analytics in across all its departments. We heard about the way they are using the data for the income tax, and I think that's one of the reasons that's giving them confidence of a 25% or so increase in the personal income tax collection. I think they have the full data of the people who deposited how much cash in the bank accounts post the demonetization or even before that, the people who are taking various kinds of benefits from the government, the people who have traveled foreign, the people who have bought the cars, and how all of these data can be used in various kinds of analytics. I think somewhere there was also mention about using the a satellite, or I think some geospheric analysis for in some other context. I think that was regarding that incremental ponds under the NREGA, various kinds of things. And I think India is becoming a data-rich society. India is becoming a data-rich nation with more than 1 billion people using the biometric card over the next few years. I think transformational things can happen and the overall governance can improve very, very significantly when the government has so much of access to the data, the way they can be analyzed, the way schemes can be monitored, the way outcomes can be monitored. I think that could be quite transformational. These are initial days, but I'm sure, as Bill Gates said, that we always overestimate what can happen in next 1 year, but we always underestimate what can happen in 10 years. And I think some of the longer term implications of the way these things are improving, the way the digital technology is playing a role even in governance, I think can have path-breaking impact over a longer period of time. Going from here, post the budget, I think there are 3 or 4 I might have major factors of growth which I might have discussed last time. I think the 3 or 4 major themes that we believe can spur growth, while the government has restrained itself from really expanding the fiscal side, neither on the consumption side nor on the overall investment side. The overall government spending is going to be limited, but there are few things because of the focus on the rural areas, with focus on crop insurance, with more rural roads, with more electricity supply there, with the financial connectivity that everybody will have a bank account, with more digital connectivity, broadband reaching to every village and every Indian having a mobile phone and remaining connected. Crop insurance I talked about. I'm sure I think even some of the other measures like more spending on irrigation, all these things will go a long way in improving the rural economy, and I think that could be a big driver of growth. The per capita GDP of rural India is much lower than the urban India. Large part of the population, almost 2/3 of the population is living there, and I think if the agriculture productivity improves, if there is more benefit in the form of direct benefit transfer or in the form of NREGA or in the form of other spending goes there, and with the overall productivity enhancement measures that I talked about earlier, can structurally improve the rural economy very significantly. The another growth driver is the affordable housing. While we all know that there is a slowdown in the real estate, but there is a huge part of the population which wants to buy a house. At the same time, the government has provided tax incentives for affordable housing. They've expanded the scope of what can be called an affordable house. There are more easy credit availability, there are interest subvention, there are infrastructure status that has been given to that sector. There's so much of investment of lot of investors across the country in idle land. I think they all can move towards affordable housing, and that can actually become a growth driver. The third, which I keep talking about, is I think the access to credit, which is improving at a very fast pace in India with digitalization of finance. On one side, the savings is improving, household savings, which is channelizing into the financial assets, is improving. On the other side, that is also providing an opportunity for people to borrow money from the formal channels, with so many MFIs, so many small finance banks, payment banks, with so many of these NBFCs, housing finance companies. PSU banks are expanding retail credit aggressively, private sector banks are expanding aggressively, and I think it's becoming easier for people to borrow money. And now with the more and more increasing tax compliance and increased digital finance, I think that can also improve, and that could be a big growth driver going forward. With a slight improvement in the global economy, our exports have started picking up for last 3 or 4 months, and I think that could also be, if the global economy continues to do well from a low base, I think exports could also do reasonably well. Last but not the least, the private capex will still take some time given the leverage in the corporate balance sheet and also the overcapacity in several sectors. But the government capex in couple of sectors, and yesterday again you mentioned about it, that infrastructure is one of the priority area, both from the central government and the state government, whether it's the urban transportation, whether it's the defense, whether it's the railways, whether it's roads, whether it's waterways, the transmission and distribution within the electricity. Some of these could be a growth driver, and I think another a year or two, because of these factors, if the growth picks up, if consumption does well, the government spending happens, I'm sure private sector will get the confidence and improve the balance sheet to invest more money in the private investments can also improve. Now the event is behind us, and I think the market's focus will shift to global cues. Market's focus will shift to the execution of whatever has been presented in the budget. That's going to be one of the key, and of course to the corporate earnings. Next year, as we mentioned in the last call also, the most important thing, the driver for the market is going to be corporate earnings, which have been under pressure for several quarters for a variety of reasons that we keep discussing about. Hopefully, I think with the right kind of government policies that we have heard, I think with the cyclical recovery in the, at least on the consumption side, and with the government spending on the infrastructure, with the commodity prices improving globally, I think the banks NPA issues are getting resolved. I think over a period of time we can see the recovery in the corporate earnings. I think valuations have become reasonable, and with the earnings growth, if they come at let's say 13-14% over the next 3 to 5 years, equity market investors can expect those kind of returns. Of course, there are some challenges, particularly from the global economy side. While the global economy seems to be doing well, the underlying currents are positive, but the headline news, what you are hearing from the United States in terms of policies or what's happening in Europe, sometimes disturbs people, and I think that might keep the markets volatile going ahead. But I think the structural story about the India's growth and about the potential of the corporates to leverage on that growth and deliver good, for the market to deliver good returns over the next few years remain intact. Lastly, I think on the fixed income side, we believe that with the prudent fiscal policy and the monetary policy framework has created a good, I would say, environment for stable, low interest rates for an extended period. Having said that, the global environment where the US Federal Reserve is on a rate hiking mode, and some of the other central banks, I believe that the best of monetary accommodation is behind us. Whether it's the European Central Bank or the Bank of England or Bank of Japan or even the Chinese Central Bank, I think the monetary accommodation that we have seen in last few years is behind us. Increasingly, I think the inflationary pressures, there are some incipient inflationary pressures emerging globally. So I think that global environment may not allow our interest rates to go down substantially. Also, we have to keep in mind that while central government borrowing is much lower than expected next year, but there would be higher borrowing. There could be higher borrowings from the state government, also the Uday bonds and some of the other government, particularly from the state government side, can put some upward pressure on the interest rates. But by and large, we believe that from a medium-term perspective, interest rates are likely to remain stable, though we don't expect substantial downside from the current levels. With these words, I'll be very happy to take any questions.